Hello and welcome to Startup Street. I'm Arundhati Ramanan, and with me as always, Shruti Mishra. These are the top headlines from the startup world. Linkrunner, an AI-powered app attribution and analytics platform, has raised 5 crore rupees in a pre-seed funding round led by Titan Capital. The funding will support hiring across engineering, data science and sales, as well as drive product innovation and go-to-market efforts across India.
Quartz, a creator intelligence and collaboration platform, has secured funding from the Chennai Angels as part of its ongoing pre-Series A round, which is targeted at $1 million. Quartz is targeting $30 million ARR by 2026, growing 3x year-on-year in enterprise client adoption.
Elon Musk's X argues online content cannot be regulated as per the whims and fancies of government officials, claims misuse of power by union government at the Karnataka High Court. This after Railway Ministry ordered the takedown of a viral video of a car being driven on railway tracks.
Tesla shares slide 7% as Elon Musk's plans of launching a political party reignite concerns over his commitment to the company's future. The EV giant's market cap erodes by nearly $70 billion in 2 sessions. Musk's net worth shrinks by $16 billion to $346 billion.
Google has rolled out an AI mode feature for all users in India to get helpful AI-powered responses and explore topics more deeply on the web. This feature, powered by a custom version of Gemini 2.5, will be available in Google Search, and there will be no need to sign up for labs. Those were the headlines that we're tracking for you this evening on What's Brewing Today. Creditwise Capital, an NBFC focused on two-wheeler and MSME loans, has raised 200 crore rupees in its first institutional capital fundraise. The round was led by Trident Growth Partners, which infused 120 crore rupees. This is Trident's second investment from its 2,000 crore rupee maiden fund. The fresh capital will help the Mumbai-based lender scale its tech-driven credit platform across India's Tier 2 to Tier 4 cities. Joining me now to discuss this further are Gurpreet Singh Sodhi, the co-founder of Creditwise Capital, and Pravan Malhotra of Trident Growth Partner, as well as my colleague Shruti. Gentlemen, thank you so much for taking time out and being here with us on Startup Street. Gurpreet, let me start with you, right? Creditwise Capital is an NBFC that specifically focuses on two-wheeler financing and MSME lending. If you could take us through what you have on offer and the kind of presence you've already built.
Oh, first of all, Shruti, Aruna, thank you for giving us an opportunity. About Creditwise Capital, we started this company in 2019 with a focus on two-wheeler products. Since I come from a background where almost 30 years I have led the journeys, and after 30 years I now been a part of Creditwise Capital. Along with me, one of my partners is Alesh Ablani. We both have been working together. So I think in last if I talk about in last 4 years, our growth has been phenomenal in two-wheeler industry because of a core understanding and a tech-driven approach. I think the best part we have built and we have challenged the legacy way of working. We have a branchless model. We are today operating in 10 states. And if I talk about our growth, it has been 64% CAGR. Versus if I talk about the finance industry growth is around 19%. So I think our strategy has been very, very clear. We wanted to serve the Bharat and Tier 2, Tier 3 cities through tech innovations, what we have built till now.
All right. Gurpreet, the follow-up question, you've got this fund infusion of 200 crore rupees. I believe you're looking to enhance your lending platform and deepen your presence in underserved cities. If you could elaborate on these plans and any new offerings you plan to roll out anytime soon?
I think this fundraise, phenomenally, what our focus has been very clear. It would be predominantly in 4 major areas. One for us is growth. Which we are already, we have been growing for last 4 to 5 years around 60% CAGR. The second is we wanted to enter into new space. We recently started loaning against property. The best part is we have till now acquired more than 2 lakh customers, and we would like the strategy has been from day one is to acquire a customer and live with that customer for 40 to 50 years, giving fulfilling the needs. So we are starting a product called loan from property, which we will be sourcing through our internal customers. So it's a part of our cross-sell strategy. Then finally is we would now would like to build a strong team. And finally, the fourth is a tech build-up. So I think the best part for Creditwise Capital, like me and my co-founders, has been focused is to bring in technology in the best of the way where it can create a customer experience, and finally it leads into the growth. Today, if you see, we are branchless. We are operational in 210 cities. Despite of that, we are for last 6 years seamless working and with the ensuring customer satisfaction without us. So I think this is our moat. Our strength
Sure.
has been to underwrite. Within 1 second, 1 minute, we underwrite a customer. I think that is our strength, which is actually coming from a tech.
Sure.
Yeah.
Yeah, absolutely. You know, Pravan, let me bring you into this conversation. You've invested 120 crore rupees to lead the funding round in Creditwise Capital. That's focused on, two-wheeler and MSME lending. This also marks TGP's second major investment from its maiden fund, right? So if you could sort of talk to us about what made you bet big on this firm, if you could take us through the rationale.
Absolutely. Thanks, Arundhati. So I think, for our approach for Trident Growth, while we look across a number of different sectors, typically we're following sort of the consumption story. And lending in particular is something that sort of tracks that quite nicely. We have been looking at the secured lending space and tracked this for a number of years and been following companies. Creditwise Capital stood out early on based on the team and the background of the team. So as Gurpreet mentioned, the team is a combination of one which has tremendous domain expertise and long-standing experience in the lending space on two-wheelers, combined with a very strong technology and financing sort of background. So that stood out as a team that we knew was going to be was successful. And we've been working closely with them for some time, and now decided to lead this round. In particular, again, as was mentioned, I think the tech-driven platform that enables them to very efficiently evaluate potential customers, make loans, monitor them, is something that really stood out. It allows them to provide sort of industry-leading benchmarks in terms of the time, the efficiency, as well as very low NPAs compared to the industry standards. So we really feel that this is a high-growth company that was going to scale tremendously, and we're providing both capital as well as value creation through not only the team's
Sure.
the Trident Growth experience, as well as our founder network and operating partners to help the team in its scale-up journey.
Okay. Pravan, let's talk about TGP now. It has a 2,000 crore rupee target size, reinforcing the firm's drive to invest in category-leading growth stage companies across India's rapidly growing economy. If you could take us through the sectors that are looking interesting, what companies are you in talks with to invest in?
Absolutely. So there are essentially a few different sectors that we're finding quite interesting now. So again, our first investment was in the enterprise tech space with SpotDraft, where we co-led that round. The second one with Creditwise in the financial services space, in particular around lending. These are two areas we find quite interesting. We are closely tracking on the manufacturing segment right now, again, driven by the Make in India story, the shift from China on the manufacturing side, and in particular, some specialized players. So that's one where we're spending a lot of time currently. The other couple of areas that we're looking at is in the consumer space, in particular, some omni-channel brands, and then healthcare is another focus area that we're spending time on right now. So again, overall, we sort of track broad themes that are prevalent and the tailwinds that are driving sort of the India growth story. But within that, we spend a lot of time sort of looking at very deep mapping of subsegments, tracking companies bottoms up, and then finding the right opportunity, the right inflection point where we can come in and lead the rounds and help these companies scale to the next level of their journey.
Sure, absolutely. And Gurpreet, coming back to you, you hope to also use the funds that you've raised right now to triple your assets under management, right? If you could quickly tell us, how do you plan to do that? And also, where are your AUMs currently at, and how much do you want to grow it by?
Yeah, sure. See, we started a journey in 2019, and today, if I talk about from 50 crores first year we round, in next 4 years we are around 700 crores AUM as on day we speak. The thought process and the vision what we have set inside and our team and my co-founders is to reach to 4,000 crores by financial year 29 March end. Out of this, 60% what we are targeting will come from our two-wheelers, and from the LAP, which is secured, 40% AUM will be coming from the LAP product. So this is the way we wanted to go. I think the thought process has been very clear, Shruti and Anna, is to keep the portfolio at the top, followed with the growth,
Sure.
a completely compliance-driven company. And finally is the profitability also need to be ahead. So I think from
Yes.
day one, since I spent almost 30 years working for various organizations, but I think first thing what I was very clear, Kia, the company has to be a profitable.
Okay.
I think that is something what we are always proud of.
Well, on that note, we'll have to wrap up our conversation. But Gurpreet and Pravan, many thanks for joining us on Startup Street, and wish you both the very best for all your growth plans.
Thank you, Shruti. Thanks, Sharma.
All right, moving on. On the hot seat today, we have sustainability packaging startup Bamboo. It has secured 90 crore rupees in funding led by Ashok Goel, former MD SL Propack, and Anderson India Capital. My colleague Ritu Singh caught up with its founders and began by asking them about the brand's clientele and market strategies. Take a look.
At Bamboo, the vision of the company is to eradicate single-use plastics from wherever possible. And the first industry that we have targeted is the packaging industry, which contributes to roughly around 60% of the global plastic waste which is generated, right? And as you rightly said, there's a lot of greenwashing happening under the name of compostability. So there are two compostable solutions. One is home, one is industrial. Unfortunately, people are, what you see in the market is industrial compostable. What Bamboo is building is a home compostable material, which basically do not require any kind of special treatment for it to degrade. It can degrade naturally when it comes into the contact with the microorganisms present in the soil.
Well, Kunal, tell us about this 90 crores that you've now secured. How do you plan to deploy this for growth?
Yeah, so basically the plan is to grow, and we want to go globally as well as exponentially. So we have a couple of product lines that we have planned out. These are the primary products. So up until now, we were serving the secondary markets of paper-based products, and the next plan is to go into biofill, which is our proprietary product, build the primary products, which is going to cater to the FMCG sector, into manufacturing as well as into the agri sector, and create products which will be for the larger enterprises.
Well, give us a sense of what your current manufacturing capability is, and how do you plan to scale that?
So we have 7 lines of machines. These can churn up to like 2 crore bags on a monthly basis, but we are going to make it as 5 times of the capacity that we have. But building in newer infrastructures of the world-class machines from different partners across the world, we're trying to assemble it together in one location so that we can not just become one of the primary suppliers for these products, but also state-of-the-art facility for showcasing to the world.
Well, you also have plans to enter the global markets, and you're looking at the Middle East and also North America. What gives you the confidence that you'll find success there? What is the scale of the opportunity you're eyeing?
Well, see, we are trying to solve for our global partners, the largest FMCG companies that we are working with today.
Okay.
We are going to be globally with them, right? The first opportunity that we are looking to cater to is serving these customers globally.
So Indian companies that are already your customers and have presence overseas?
Yeah, global companies which are also present in India.
FMCG
and others, CPG companies. So we are going to pick back with them, solve for them in India, and then scale it to the global markets. Once we are there with them in the global markets, then we are going to explore more opportunities, what we can do with the global customers that are specific to North America region or Japan region or Australia and so on and so forth.
So Kunal, your target is to hit 120 crores in revenues and profitability in the next 12 months. What will help you get there?
So primarily right now we have enough customers for us to give us 100 crores of revenue from our ARR basis. These are all large enterprise that we have already engaged with. But the plan is as we go exponentially in the global markets, we'll build our potential in the Europe and the US markets. And especially looking at the contributions that we would have done in India with the products that we would have launched, we'll take similar products to those markets so that the success is already demonstrated in our local markets and we'll take it to the global markets. We already have a lot of requests coming from those regions. So we are just holding for us to really get our capacities built up and then we go to those markets.
Vaibhav, you also have plans to enter the D2C space. Now that is tricky and interesting as well. How do you see a typical bamboo product in a household? What exactly is your plan here?
Great question, Ritu. So, see, when we talk about the vision of the company is eradicating single-use plastics, right? Now, a large portion of it also is from the consumer side.
Yeah.
Say, for example, you have compostable garbage bags right now. You have your oxo-biodegradable so-called garbage bags. So we are trying to come into those spaces. For example, garbage bag is one of them. Then we have pet poop bags.
Okay.
Right. Then
same category. Yeah.
Similar category.
Yeah,
and then
slightly smaller.
Yeah. Right. And also, the female hygiene disposable bags as well. Okay. And then we are coming up with bamboo-based paper solutions for your tissue papers. Tissue paper. So we are developing a home kit for where a customer can actually go truly sustainable. When we talk about sustainability, it's not about only eco-friendliness, right? And what the products we develop comprises of 4 pillars that we have. One is definitely the positive impact onto the environment, then the scalability, cost efficiencies, and the functionality. So we are maintaining all of these 4 pillars whenever the product is getting developed. So in D2C also, if you see, we are coming up with antimicrobial garbage bags, which you have not seen before. And that's 100% home compostable ones, right? So we are going to be the only one in India.
How soon will you be launching these D2C focused products?
So we are unveiling it today, but we would be launching it during the 15th of August.
Okay.
Freedom from plastic, this Independence Day. That's the story that we are going to do.
About 500 brands currently already use your product, but where is the demand really moving next? What are clients asking for?
So every customer is looking to change the way they have operated. So there is a lot of policy pressure in terms of moving away from plastics. So all large customers are looking out for an alternative solution, and this is the right time. So from a policy perspective, from the brand's requirement perspective, from the consumer's awareness, I think we are at the right point. And talking about the brands, I would not name them, but the largest of the brands across the world are looking for these solutions, be it Unilevers of the world, the ITCs in India, the Godreges in India. So everyone is looking for an alternate solution, and we are in trial phases with a lot of these customers. They have liked our product. We have to go to multiple stages of development along with them, but we are in a certain stage that we can confidently say that within the 6 to 9 months of time from now, when we have our machines and everything ready, we will be able to serve these markets.
On that note, it is time for us to head into a short break. But coming up next, actor turned entrepreneur Vivek Oberoi has 12 active firms in his portfolio and hopes to list 2 of them in the near future. We bring you a conversation with the star himself on his investment strategy. On the other side, stay tuned.
Welcome back to Startup Street. Amazon is gearing up for its flagship shopping event, Prime Day, from July 12 to 14. Ahead of this big sale, CNBC-TV18's Ashmit Kumar spoke to Abhinav Singh, the Vice President of Operations at Amazon India, who outlined that the firm's 2,000 crore rupee investment plan. He also opened up about Amazon's quick commerce ambitions in the face of stiff competition from the likes of Blinkit, Swiggy and Zepto. On gig workers, he cautioned against having different social security laws for different states. Here's a slice of that conversation.
Just a few weeks back, we spoke about investing 2,000 crores in improving our infrastructure, in expanding it, and also improving facilities for our associates, both who work inside our buildings and those who work out on road. We spoke about Ashray centers, which are these rest stops for delivery associates who deliver for any company, not just Amazon, where they can get free access to tea, coffee, charging, clean restroom facilities, an air-conditioned environment. And today, we want to talk about an expansion on the fulfillment side. We are launching fulfillment centers in Delhi NCR, Rajpura, Indore, Bhubaneswar, many such cities. And we are also expanding our delivery network, launching 30 new delivery stations in tier 2, tier 3 cities, in Havra, in Chandigarh, Mohali. The idea is to be able to offer fast, reliable speeds, not just in these cities, but in nearby areas. So it's a continuous process, one and a journey we've been on for the last 13 years, metronomically investing, building a network that's enabled by tech, but employs hundreds and thousands of people.
You've given me a number of cues. I'll take you through them one by one. First, let's talk about FC's fulfillment centers. For the benefit of our viewers, large warehouses essentially, which serve as backends for the Amazon India operations. Let's talk about that. Let's talk about this new capacity that you're bringing online. Can you give us a few numbers? Where do things stand? How does it stack up against existing capacity? And what does the road ahead look like? Are we looking at more penetration of these warehouses or fulfillment centers in tier 2, tier 3 cities? Some indication as to what this expansion drive for the footprint of Amazon India looks like?
Absolutely. You started by calling them largely warehouses. They're much more than warehouses. They're technology-enabled fulfillment centers, which are driven by data technology, which helps our associates and managers ship a very consistent, reliable experience across the country. Just these 5 buildings I spoke about are 1.8 million cubic feet. To give you a perspective, right? These numbers can become a little hard to imagine. That's like 10 Eden Gardens put together just in time for Prime Day. It's a substantial increase in our network from an expansion perspective, and you'll see more as we get into the rest of the year.
So how are things positioned for you, July 12th to 14th? To begin with, the first time that we'll have a 3-day Prime in India. Usually we've seen a 2-day Prime Day. Give us a sense what your expectations are, any growth numbers that you have clocked in your mind in terms of what you're expecting over and above what you had in 2024.
One thing which is really nice about Amazon, and for me personally working here, is that we focus disproportionately on the inputs. And our inputs will always be about the customer, getting faster to the customer, getting to them as soon as possible with the widest selection. To give you a perspective, in 2024, we delivered 41 crore items the same day or next. So in just that 1 year, we have increased our speed by 26%. And we continue to do this every single year. So this Prime Day is going to be no different.
I want to get a sense of what your take is on the consumer sentiment. Very disparate indications coming in from either brokerage reports, from corporate earnings, or from macro numbers indicate a slight amount of sluggishness, especially in the first half of 2025. What has your experience been for the beginning of this year, and what your outlook is for the second half?
Again, I'll go back to the inputs. You make available the widest selection at the lowest price and the fastest speed. Work with sellers so that they're able to provide the right prices to the customers and provide the right infrastructure for the delivery to be done as soon as possible. From an overall market size perspective, we are a very small part of retail, single-digit percentage. So there is a lot of headroom for us to grow, and that's how we look at it. We stay focused on our inputs.
But just the second half of this year, given how first half has panned out for you, when you look at indicators such as the monsoons, the RBI rate cuts, the upcoming festive season, your outlook for what the second half may look like?
We are optimistic. We are optimistic about the opportunity in itself to serve India. And like I said, we will always remain focused on the inputs. We are very long-term optimistic about the India opportunity, and that's what drives us every day.
From lab-grown diamonds and Alcobev to digital education and green infrastructure, actor turned entrepreneur Vivek Oberoi is managing a portfolio that spans 12 active companies, multiple IPOs and investments across sectors. In an exclusive chat with Aishwarya Anand, he opens up about the vision driving his strategy, why founders come before financials, and how he blends gut instinct with market logic. Take a look.
It always starts with a founder, a founder's commitment, dedication, SWOT analysis of the founder. It's okay if he's failed before or she's failed before. But how hard are they willing to hustle? Like Nishant Sharma, guy from Rutland Square, one of my recent investments. He chased me for 6 months. And then I looked at what he was doing. I looked at his journey. I looked at how he started from waiting tables to investment banking. Today, it's a success story where we've jumped in the last 18 months in terms of revenue, 400%. And in a space like Alcobev, where distribution is a hurdle, that's a big jump. And the CAGR is going to be in hundreds of percentages, at least for the next couple of years, when we talk about Solitario. The idea was great founder, Ricky Vasandani, hustler, right? Great design knowledge. Wanted to go into the commodity of lab grown. And I was like, no, that's not the strategy. Let's go using the existing supply and the growth in terms of reactors of lab-grown diamonds in India, and let's build a truly global fine jewelry brand. So that's what takes you into 9 countries, 25 cities in a 2.5-year span. And now you're doing deals with partners like Haresa.
Correct.
Now they're a $7 billion giant, but they're partnering with an Indian startup. That's something to be proud of.
Help us understand how many companies are you currently overseeing?
I have 12 companies that I'm still active on.
Understood.
2 of which I'm taking public this year. Pentacle, Solitario, I'm taking public this year. iScholar, Ready Assist will be in the next 12 months, ready to go IPO, inherently profitable, solid EBITDA. For example, with iScholar right now, we've achieved about 1,000 crores in valuation. Our next round is focused on a roll-up play, more strategic acquisition, acquiring physical aspects of businesses and merging them with our digital umbrella and making a phygital play.
Correct.
So by the time we go public, I expect us to have a 2.5 to 4x jump for investors coming in this round.
Well, that was Vivek Oberoi on his investment strategy. With that, it's a wrap on this edition of Startup Street. For more news and updates, stay tuned to CNBC TV 18.